Hello, everyone, and welcome. Today, we are going to be talking about the current state of mergers and acquisitions in the games industry. There's been a lot of activity over the past couple of years and even more recently. But more interestingly, what do we think will happen moving forward over the next year or so? Starting off 2022, we've already seen a number of blockbuster deals, including Take-Two's acquisition of Chris Petrovic's former company Zynga, and of course, the Activision Blizzard acquisition by Microsoft. So, today, specifically, we'll speak to first a quick review of some of the biggest deals over the past year. Second, what are industry implications of the recent and upcoming potential wave of M&A? And third, what can we expect in 2022 and beyond? And with us today to speak on all of these issues and more are first, Saad Choudri, CEO at hit game studio Miniclip. Second, Michael Metzger, partner at investment banking firm Drakestar Partners. And third, Chris Petrovic, chief business officer at the number one publisher in Forex games, FunPlus Games. So I thought we could also start with just like a brief intro from each of you. And maybe if you want to say a few words about each of your respective companies, maybe starting with you, Saad.
Yeah, hi, I'm Saad. As you said, I'm the CEO of Miniclip. Came into the role probably about close to 6 months ago now. Before, when I was on the show, I was a chief strategy officer, concentrating mostly on M&A and acquisitions and publishing. We've continued to do that pretty well here at Miniclip. We've acquired 8 studios over the last 3 or 4 years. All of them have grown significantly since our acquisition, so we're very happy about that. And we're planning on continuing to do that. But at the same time, we're also launching more games and building more games internally and still focusing on organic growth as much as inorganic growth. And yeah, things are going very well at Miniclip. We've had very, very strong quarters post the kind of lockdown pandemic stuff, which we were worried about that not being the case, but it has luckily been that way. So, very excited about the future, and it's interesting times.
That's great to hear. Michael?
Hi, I'm Michael Metzger. I'm a partner at Drakestar Partners. It's a global investment banking firm, about 100 folks across the US, Europe, Middle East, Asia. And we advise on M&A, a lot of sell-side M&A and growth stage financing. Last year has been also a phenomenal year for us with 50 closed transactions and worked on a ton of gaming deals and excited what this year's going to bring.
All right. And Chris?
Yeah, thanks, JK, for having me back. Chris Petrovic, Chief Business Officer at FunPlus, as you mentioned, have been here for a little over a year. For those of you that don't know, I like to refer to us as one of the biggest little companies that most people have not heard of. I think by some accounts, analysts have us as one of the largest privately held companies in all of gaming, which is quite a great company to be in when you think about who some of the other companies are in that space. Before here, I was at Zynga for almost 5 years, the greater part of 4.5 to 5 years, leading corporate strategy and M&A. Started in 2016 when Frank joined and was part of the turnaround management team there and participated in most of the transactions, starting with the board and card studio of Peak and culminating with Rollick Studios and all the ones in between, which included Graham Games, Small Giant, the rest of Peak Games. And also was, part of the conversation before I left in some of the other verticals and categories that the company ended up moving into. So it's been great to see all those things executed by the team there. And obviously the culmination of Zynga finding a home with Take-Two was also a good thing to see.
Great. So maybe just kicking it off with looking at some of the more recent acquisitions or acquisitions over the past year. We've had some big ones, as mentioned, Zynga, Activision, Blizzard from this year. And so I thought we could start by speaking about how you guys would interpret some of those acquisitions and the potential impact to the industry. And maybe starting with Activision, Blizzard to Microsoft. From your perspective, how would you guys interpret that acquisition? And what do you think some of the major industry implications are? Maybe starting with you, Saad?
Yeah, I mean, look, I think there's been a lot of commentary on that deal already. I think I subscribe to the same thing that most of them have mentioned, which is this is clearly a deal where Microsoft has acquired the best-in-class IP, and for Game Pass, that's clearly a direction that they want to go down. And having those studios and having that IP be part of that is clearly going to be very important in the future. The success of probably the Bethesda deal that they had before has probably led them to see that has, that worked out well. So, might as well double down on that kind of side of it. In terms of King and mobile, I see that as a bit of an odd thing within the strategy. I mean, they're going to have to consider what happens there. It's interesting to see that there's been some management changes there. I'm sure it's not related, but, it could be as well. But that's the one part of that transaction which doesn't kind of really fit so far. In Activision Blizzard King, it made sense, but with Microsoft and what they're doing, I actually think it opens them up to some regulatory issues which they might have with Apple and trying to do, streaming on mobile devices as well. But I think generally speaking, it's a statement of intent, right, by Microsoft, and I think we were all surprised to see it happen. We can talk about valuation all we want. I actually think it's probably a reasonable deal when you actually look at it and to where the 52-week high was versus when they actually pulled the trigger on this. But the implications are, massive, I think, because Activision was one of the big independent ones out there. And now we're talking about a handful of other game makers who aren't attached to a platform. At the end of the day, Microsoft is clearly trying to become the platform around this space, and this not only underlines it gives them a real dominant position. I do think there will be some implications around how many AAA games will now come out and how much funding there'll be for other studios to try and do this. I think if you're not part of a major platform now, I'm not sure how you're going to be able to essentially build those games without that support.
Michael or Chris, any thoughts?
Yeah, I mean, I think it's a great move. Microsoft, was looking at Activision for many years, and at the same time, there's been a lot of rumors about, Activision being acquired by others. Disney was one people talked about several years ago, and it was also fortunate timing from a Microsoft point of view. Activision was trading, I think, close to $100, and they bought it around $60. So, if you want to buy, this is a great time. And it was also, my understanding was really triggered by Bobby Kotick looking for, an exit to some extent. And my understanding is the whole discussion started just days after the Wall Street Journal article came out, and Bobby reached out to Phil Spencer, and the discussion started, and I went fairly quickly, and it's obviously a massive deal. So I think it was a smart move from the Microsoft side.
Right. And Chris, maybe a couple other points I'd really like to hear you speak about is, I know you have a lot of experience in terms of acquisitions, but when you think about the potential integration issues, or will there be a lot of integration between Activision, Blizzard, and Microsoft? If you could speak on that. And then the other point, I know you guys at FunPlus are very interested and excited about IP and the use of IP. Do you think there's a change in terms of like how much commercialization there is on some of the IP from Blizzard, for example? Any thoughts on that?
Yeah, so on the integration point, I think, in these kind of situations where you're buying mature companies that are at such scale and have such established practices already that have led to success, there's no need to impart any kind of integration other than the bare minimum of what's needed, for example, from a reporting perspective. And I know, speaking from experience at Zynga, as a public company, when we acquired studios or companies, that was our starting point. Was, hey, as long as we can have a clear view into your financials and your audience metrics, so that we can accurately report on behalf of all of us as shareholders, that's our minimum requirement. And everything else over time will become a discussion and hopefully an opt-in on behalf of the company that's been acquired when they see the value in what you offer from your suite of services as an enterprise. Here, because Microsoft has experience running studios. They know exactly what those cultures are like. They know exactly what makes them tick. And they know that Activision Blizzard comes to the table with a lineage of successful franchises and IP that they want to continue fostering. And I think going back to the logic for this deal, I think it's really savvy of Microsoft to act so quickly, because it shows how a big company can be very, very nimble. You think about what was reported about their interest in TikTok, for example, during the time when there was a threat of divestiture, and Microsoft's name was, front and center quite quickly, which you would not have expected. That would have potentially been not a fire sale, but a more value-driven acquisition because of, regulatory pressures. Here, the Microsoft responded to a value that Michael just described because of where the stock was, given the existential issues that the company was going through. So they had a 33% discount on from the previous high without even negotiating, right? Even though I would argue that they'll never see that 75 billion returned 100%, it almost doesn't matter, because the product management is around the stock price as a public company, right? So it's all about accretiveness of value, more so than thinking about individual games. And in this particular situation, the arbitrage here was quite accretive. And I do think that they will just let Activision and Blizzard continue to do their thing, and to the certain extent, King. To what Saad said earlier about the regulatory issues, King becomes such a small part of this equation now for the collective enterprise that I don't know that regulators in the U.S. are going to single out the mobile part of this acquisition as something that is a make or break. I think it's going to be around platform exclusivity. It's going to be around pricing. Those are the things that they're going to anchor on. I think the question is whether King, as a standalone business, finds that home to be more beneficial or less beneficial to be now part of Microsoft. And then do they do like what AT&T is doing, and then peeling out, kind of smaller scale businesses, right? Because now King looks a lot smaller scale under Microsoft's lens than it does under Activision's lens, with a lot less collective wisdom around mobile. So, integration will be light, and the IP strategy will continue to be on course without interruption from Microsoft. Is my belief.
Got it. And maybe now talking about Zynga, and I know, Chris, maybe we can not start with you, so you can, I don't know what you can speak about and what you can't speak about, but maybe starting with you, Saad, in terms of what you think the sort of story, synergy, narrative is behind that acquisition. It'd be great to hear your take on that. Saad?
It's kind of, it's hard to go first knowing that Chris is on the call as well. He's got much more insider knowledge around that. So I'll just, I will take it from an outsider looking in. I mean, we know Take-Two has been looking at mobile for a while, right? They acquired Social Point, Two Dots, Nordeus. So they've definitely been trying to do things. And I think, clearly the management team said Zynga and us being together makes more sense. You saw Zynga starting to move into console as well. They'd acquired a small studio to do something around that. So they were starting to merge into it. Of course, Frank and Bernard, who are great, come from that background too, with their history at EA. So you kind of do start seeing how the cultures start aligning between Take-Two and Zynga, right? And I think that was probably the important part, because the reality is Zynga is, I don't think there's much like integration in the same way as what other transactions happen. Zynga clearly will be the mobile operators. Take-Two will continue doing what they're doing very well in the kind of PC console space, and I think that's the divergence we are seeing. We've seen in the industry over the last few years. You're a PC console company which has some add-ons with mobile which are very significant, or you are a kind of pure play mobile, free to play first company. And now with these transactions, what we are seeing is that we are seeing that consolidation in gaming happening, where it is, well, these are just, these are companies that have content that, operate in different ways. So I think with Take-Two, they're probably looking at their kind of peer set in Ubi and EA and Activision and going, well, we're just light in this area. We're very light. And the transactions we've done have just not moved the needle as we wanted to do. Anyway, in the grand scheme of things, those other transactions were pretty subscale compared to their core business, and this obviously transforms them overnight with that transaction. So I just think it's the sum of the parts being much more valuable together as trying to compete themselves. That's how I saw it. A phenomenal price, I thought, for Zynga in the end as well, but I mean, probably justified, definitely justified. But But yeah, that's the outside looking in kind of view. I'll be very interested to hear what. I know Michael will have some inside knowledge as well, and Chris certainly will.
Michael, is there a banking perspective on this, or what are your thoughts?
Yeah, I mean, on a high level, it's to some extent the market is consolidating, right? And you either buy somebody, you'll be eaten by somebody else. And Take-Two has made some moves, modest sized moves in the mobile space, but not much. And it's clear mobile is a massive market, which they're not playing to a significant extent, and building it in house takes a very long time, and that just puts them front and center immediately. So I think the diversification was one key driver, and just becoming a key player in mobile was probably the two key ones. And I guess a price premium was, a little bit surprising, but at the same time, it was to some extent also a little bit of a bargain, because Zynga was trading like at, I don't remember, 11 or 12, and they went all the way down
12,
to 5,
12.66, yeah.
5 or 6. So it's like a 50% discount. And considering where they were trading over the last 6 months, the premium they paid actually isn't that high. But I think, was a great move, and it was probably also a great move on the Zynga side, getting a significant premium and versus continue to operate on a standalone basis.
Right. And Chris, it'd be great to hear whatever you can speak about, but the more confidential information, the better. maybe I could also ask you one potentially sensitive question, which was that, when you were at Zynga, you were kind of heading up a pretty massive run in terms of M&A over the past, 5 years. But it seems like that's where the majority of growth for Zynga was coming. Was this actually a good time for Zynga to sell, given that it seemed like they potentially, given, that M&A story may not have been there as strongly as it was when you were there? Like, was it a good time for Zynga to sell? What do you think about that?
Yeah, I'll start with that question first, and then I'll go back into the other one. Look, I think it was a good time to sell because, like many mobile companies, mobile pure play companies, 2021 showed that there was a lot of headwind that was created by virtue of what Apple had done, and that had no sign of changing direction. And if you layer in the albeit longer time frame that Google has presented, but an additional layer of bumpiness that will come into our industry over time with Google making these changes, not as dramatic, obviously, because they've committed to doing this more long term. The notion of pure play companies, and it's no surprise, by the way, that Playtika has announced that they're exploring strategic options as well, right? I think if you look at the COVID bump and then the subsequent deflation of that bump by virtue of IDFA, the artificial highs that the market created for the mobile pure plays were not going to be reachable again through organic means anytime in the near future. I think we all can agree that whether it's through UA or through even using licenses, that getting organics is just more and more difficult, right? It's been made more difficult. That is the reality of our industry. So I think there was kind of a risk reward calculus about, if I'm at Zynga's shoes, looking at the premium that was being offered relative to my confidence in my ability to get back to that 52-week high on my own measure in any time in the near future. It seemed like a good time. In terms of the merits of this merger, as Michael alluded to, great companies talk to each other for a long period of time. And I think that even though the actual mechanics of this deal probably happened quickly, if you read through some of their public filings, the getting to know you part has been going on for a long time. And that happens irrespective of whether companies like Zynga have a philosophy or a policy of not really being focused on M&A discussions in terms of being the acquiree. And Frank and team were always very clear about that we were in a heads down mode, operating the company, turning it around, getting it back to where it was, in its previous high. And that if things would happen, obviously, as a public company and as a public company CEO, you have a fiduciary obligation in some cases to, take on conversations, or if conversations go to a certain extent, you have to turn it over to your board. But as Michael knows, conversations happen up to that point of disclosure all the time between organizations when they're getting to know each other, when they're exchanging high-level notes about what they think about the future of the industry. And I think through those conversations, I can tell you that, I always had a personal professional admiration for Take-Two as a company. And I think it was shared by my fellow executives at Zynga, where we felt like, that would be a great company to partner with in some way, shape, or form in one day. And they were on a small list of companies that we felt that way about. And so when I saw the news, it was perhaps surprising in the sense of how quickly it happened over the holidays. And perhaps, as Michael alluded to, maybe the price. But at the end of the day, it was not a shock to me that was the end outcome. In terms of why Take-Two may have done this, if you look at, again, what I alluded to earlier about how public company CEOs use their filter is their product, and their product is the stock price. And so if I'm Strauss and if I'm the leadership team at Take-Two, and I look at the questions that are presented to me at earnings calls and the questions that are presented at Activision and EA and Ubisoft about your diversification strategy, how much you're investing in larger platforms like mobile, and I look at the sum total of what I've invested in mobile relative to Activision with the King acquisition, and then EA finally coming off the sidelines and buying Glue, and then Playdemic, what Ubisoft and Take-Two were doing looked really anemic to the public markets, right? And it didn't look very harmonious. Like, it was individual studio acquisitions with no kind of central strategy around it. And Zynga not only catapulted Take-Two beyond EA and Activision, but also created a beachhead in mobile with a scaled company with accomplished leadership and 12 plus years of experience in free to play, and can harmonize their acquisitions now under the Zynga kind of corporate umbrella, and give them a real defensible, diversified story that is of a larger scale than Activision and EA, and will probably give them more credit as this notion of cross-platform that we all talk about in the industry becomes more and more of a reality. And the walls between, mobile being now included in the conversation cross-platform with 5G and streaming, and the Fortnite effect, as I like to call it, with consumer expectation now rising around anytime, anywhere, any device gaming expectations. I think this was a great time and a great outcome for them. And again, as Saad and Michael alluded to, for all the success that Frank and team have had in free-to-play mobile, if you look at the totality of their history is actually more in running AAA studios and projects and marketing. So I think in the aggregate, you have very few leadership teams that have as much experience in both camps than you can see on the Zynga bench. And I think that's going to serve Take-Two very well, whether that means that Frank maybe becomes the CEO of Take-Two at some point, perhaps, or perhaps not. But he's really proven himself to be a great CEO of a public company in gaming. Even though he didn't get that opportunity at EA, he certainly capitalized on that at Zynga, and I think has a lot to offer to the Take-Two ecosystem.
Right. And Chris, when you think about some of the synergies or the additional value that's created by being part of Take-Two, you mentioned cross-platform. Do you think it's largely around the ability to do more cross-platform stuff and potentially the sharing of audience, or how would you describe what the potential additional value from being part of Take-Two would look like for Zynga?
Yeah, I think the most obvious one to me is the ability to more broadly exploit and take advantage of the commercialization of Take-Two's IP. And I know I've heard in different podcasts and in different writings online about, is Zynga the right organization? And I think you have to keep in mind that when an organization like Zynga or any organization is faced with the opportunity to leverage this IP library that Take-Two has, and it wouldn't surprise me if they started with some of their smaller ones and then worked their way up to the larger ones. But you can't look at Zynga at this moment in time as to whether or not they have the right people. I'm sure Saad, if he was presented with a similar opportunity, would go out and find the best damn talent that he could find to go after that opportunity. So when people look at our present company and say, well, we don't know if the studios are well suited, like, that problem can be solved by finding that talent and bringing them into the collective. But I think you also have to remember that there's tremendous talent at Take-Two that has stewarded that IP to the point that it is, which IP and story and narrative and character creation and that IP universe is actually a real key importance to doing any cross-platform extension. And then what Zynga knows that is devoid or disconnected from any particular genre is how to build free-to-play games and run live services and do marketing and community. And that can apply to any game that's created. And then the linkage is where you get the key talent that can actually bridge between the Take-Two side and the Zynga side to be part of that task force, so to speak, to build these successful games. So I don't worry about whether Zynga, quote unquote, has the right studios or talent today, because they can certainly fix that as needed in the future, as Saad would, I'm sure, when presented with those kinds of opportunities. So I think those kind of commentaries are too rooted in a moment in time, as opposed to thinking strategically through the lens of a CEO or a business unit lead in terms of how they would think about going after these opportunities. So I think that's where the synergies are. The other incremental one is obviously folding the 3 studios that you mentioned that Take-Two previously acquired under the Zynga leadership, so that they could be part of that portfolio and benefit from being part of an ecosystem. So those, to me, are the 2 main ones.
Got it. And I thought we could now switch and talk about the current market in terms of supply and demand. And I know on a previous podcast, Chris, you had correctly predicted that the market would be shifting towards more, public company transactions, bigger types of deals. We're here now, and so acquisitions have gotten bigger. But in terms of how you guys would characterize the M&A market today, and Michael, you mentioned you guys have done a bunch of deals over the past year. Saad, you guys have also done a number of acquisitions. And Chris, you were on that incredible run at Zynga. Are those kinds of deals still possible, kind of looking, at where we are today and in the future? And again, maybe we start with you, Saad.
Yeah, I mean, I was just going to say, Joe, I mean, the reality is what both of those transactions showed is everything's in play. Like, there's nothing that's not in play. The chessboard is definitely starting to get towards more of a consolidation endgame scenario. Before, we've been talking about consolidation for many, many years. I mean, every year we're talking about more consolidation. But the reality is, it really is happening now when you start bringing the public companies into the mix. And I think here in Europe, there are 2 or 3 which are quite clearly, I say Europe, but Playtika has announced it. They've announced that they're looking at these kind of things. We know the others are out there too. And I think it comes down to what is the goal of these management teams, and what is the goal of these, of the shareholders of these companies too, because it's not just the management teams as well. It's as Chris says, if you're a management team of these public companies, you have a fiduciary relationship to the company, and essentially what you're trying to do is maximize the returns of those shareholders. So everything is in play. I think when we look at the other layer down in terms of the universe of targets around the kind of size of the stuff that Chris was doing, those are fewer and far between. Those right. We know are not out there as much as they were. The smaller space is definitely there. There's a lot of studios where you can, between $1 to $4 million in EBITDA, those exist. But then it comes about, is that going to move the needle for some of these bigger organizations, like even for us? So you have to figure out a strategy around that. But I certainly think that kind of what would be considered the kind of top middle, but like the tier 2, tier 1 kind of opportunities of just pure privately owned, maybe VC backed. There's a handful of those. That's the reality that we're facing. So if you want to do something at scale that transforms your business overnight, you are looking at some of the more established players, and then it comes about, I liken it to one of our games, Agario, right? You're one of the kind of mid-level, spheres, and it's who can kind of capture the other one, and where does it make sense to capture? And I think to Chris's point, we're all talking to one another. I don't think that's at all a secret. If it is a secret, then okay, we've broken that barrier down. I think I met Chris first time when he was at Kabam. So we're always talking to one another, and I think to Chris's point, there's a lot of things that might on the outside not make sense, but you don't know how long some of these conversations have been going on for. And actually, I think the time now where people are going, it might make sense for us to kind of partner up. And I certainly think if you are a privately owned business, sub $5 billion at this moment in time, you're in play. And I think that's just the reality of it. And there's a few of those, so you can figure it out.
Michael,
maybe I've said
what do you
too
think?
much
Do you agree?
because this is about public market stuff. So I've got to be careful.
Yeah, I totally agree with Saad, and also to put a little bit of perspective. So we kind of look at what happened on the deal side over the last years. And 2020, we saw about $30 billion worth of deals. 2021 was like at 85. So massive increase. And for this year, we're predicting 150. So continuous rapid consolidation. And probably, if you're looking back, like in 2021, January might have been the peak of the whole consolidation with both the Zynga and the Activision deal happening within the same month and kind of pretty much creating as much deal value as all of last year together within a single month. See a massive amount of activity across the board. So there's a bunch of different factors. A lot of the public companies dropped a lot. Like in average, gaming stocks maybe dropped 50%, some more, some less. And what's happening maybe at companies like Playtika, where some shareholders wish they get closer to the price where they IPO'd a while ago, and getting to an exit where once they announced it was already a bump, and if there's a deal, typically there's additional premium that's allowing large investors to get back and get to a price much faster versus building it over many years. At the same time, a lot of those public companies we're talking to, they're also under a lot of pressure to grow. IDFA has been a major issue, as Chris mentioned, on the mobile side. And they're trying to justify to Wall Street how can they improve their price and how to grow, how to diversify. And that's, the easiest way is for them to acquire or merge with other companies. So we see a lot of that happening, being sold a medium premium. And also what I found interesting over the last year, kind of also the consolidation in the PC console space, which to some extent was driven by Embracer kind of starting it at the high volume. And, like several years ago, there were tons of highly profitable founder-owned companies out there, and nobody was really interested in acquiring them. And Embracer, to some extent, started that, rolling them up with a very unique structure. And, that got other people to buy into it and become very aggressive on the M&A side, on the PC console side as well. So some of the observations.
Right. And Michael, when you think about the distribution of deals, I mean, certainly I think the overall volume of the market has increased, especially as we move to bigger transactions. But if you were to speculate in terms of any trends that you're seeing, or in terms of the future market, in terms of whether it's the overall number of deals or whether the distribution shifts to, where we have fewer sort of mid-tier size deals, any thoughts on that or anything that you're seeing in the data?
So see still a tremendous amount of activity in kind of mid-sized deals. I would say below 100 million. There's a lot of talk about some of the large public companies, what's going to happen to them, and that's purely speculative, like similar to the size of Playtika. So I think it's going to be, if you look at the dollar value, kind of one Activision makes up a lot of smaller deals, same with Zynga. But I think I continue to see it balance both a bunch of public deals but also a lot of private deals. If you look at the overall deal value last year, we also had a lot of IPOs and SPAC deals, and with a public market in the sector dropping so much, the IPO market more or less dried up, and SPAC deals, most of them have not performed well. Discord is the one that's rumored to try to make an IPO happen. Kind of that's one of on the short list potentially to go public. Others are also having discussions, but definitely expect less kind of IPO SPAC deals this year than last year. And but M&A continue to be very healthy.
Okay, Chris?
Yeah, I think the interesting thing here for me is on the public to public side, I think there's just kind of a collective wait and see to see if the Activision Microsoft deal will pass regulatory scrutiny, because I think the last thing that other public companies want to do is go through similar exercises and then be in a queue of unknowns, right? They've spent all that capital and cycle and breakup fees and opportunity costs to line something up without certainty as to whether these things will be passed. I think the other question is whether if the Microsoft deal passes, whether that creates a higher bar for future similarly sized deals, because then the consolidation will be that much more evident. So this will be a real watershed moment to me in terms of whether or not this deal gets approval and what that knock-on effect will have on the industry. I think to what Saad and Michael were saying about deals on the smaller scale or lower end, it really goes back to what Saad says, which is whether acquirers see any appreciable value coming out of those things. Because in light of IDFA, I don't know that there are a lot of acquirers that are necessarily having at the top of their thesis that we need more capacity or we need more titles, because that associates a risk with it. Because as we know, every day that passes in our industry, it's harder to launch and scale new games. So I think many of us as an industry, as industry peers, are thinking about the mantra of fewer, bigger, better, which is interesting because that was the mantra that we had at Zynga. And then the risk of that is that if your fewer, bigger, better don't deliver, then you are penalized tomorrow for what you were given credit for yesterday. And what I mean by that is, like, for a long time when we were doing the M&A, that was kind of the darling storyline of Wall Street, and they loved that because we were deploying capital in an accretive way that was bringing terminal value to the company more so than the cash sitting on the books. But then the narrative shifted, which is, well, why can't you also launch new games? Even though we had culled our new game pipeline quite appreciably from the time that Frank joined to the time that I left. So there's kind of a double-edged sword there, right, that you're working with, and the industry and public markets can be very fickle and determining which of those levers they want to pull when they're criticizing you or praising you. And you can never really know ahead of time what that is. So I don't think, I think the lower end stuff is lower scale stuff is going to come out naturally because the subscale companies are feeling the IDFA pressure, right? They've already had limited budgets. They're not getting more funding to spend marketing dollars less efficiently. And they're probably going to be looking for homes where they can be part of a larger ecosystem. But I don't know that those ecosystems are looking as aggressively. Like I would be a betting person in saying that Saad's cadence of M&A within the same time frame may not be the same tomorrow as it was yesterday. It's also not surprising, JK, I was reflecting on when we first had our conversation last year about with Yumi and Kress about talking about our feelings about Embracer and Stillfront. And you fast forward 1 year and you see what their stock has done, right? And that quantity over quality approach has borne out as we predicted it would with you, which was not going to be positive. And so there aren't really many vectors left for growth other than the few that exist that are scaled private companies. And I think we can probably count them on two hands. And of the ones that are actionable, you could probably remove half of those fingers. So it's really not not a fertile ground for the consolidators that are at the top. But the things that I get excited about are talking about what happens to Epic, what happens to Steam. Does Nintendo change its stripes and really start getting aggressive? Like, where does Ubisoft fall out as it continues to lag behind its AAA competitors? These are the kind of moves that I'm sure in these boardrooms, if we were flies on the wall, and Michael may be in some of those already, that are really interesting discussions to be had, and for us to do our own kind of wargaming and chessboarding around what we think is happening in those companies. Steam has not been talked about for a very, very long time as a company that is of interest. I know many of us in the industry feel like there should be interesting things around them. I know Gabe has historically not wanted to entertain these things, but given the path that Microsoft is going about being the virtuous app store and the content fortress or walled garden, whatever you want to call them, and wanting to recapture some of its cross-platform glory, and plus with Steam being based in Washington near Microsoft, that marriage to me makes more sense than ever. If it's not them, then it's Epic and Steam. Where does Unity play in all this? AppLovin has been unusually quiet from a cadence perspective, and I think it goes to what I said earlier about the uncertainty around what payback it's going to get for its studio acquisitions, even with its own privileged position of having so much access to data. So I think there's a collective pause happening right now for a number of different reasons we just talked about, but none the least of which is to see this regulatory outcome for the Microsoft deal, and that will then help create more clarity for the ecosystem around what can and can't be done around M&A.
Great. Yeah, that's very interesting topics. Maybe we could actually even dig into that a little deeper in terms of some of those fingers. And so, like, if you guys were to think about some of the targets that you guys think are potentially the most attractive out there, I know before a number of names have come up, but if you guys were to think about some of the more attractive names and what you think might potentially happen. What do you guys think? And maybe Michael, we could start with you, and feel free to share whatever confidential information that you're seeing, Michael.
Yeah, I mean, on the public, just repeating some rumors that I heard. I mean, on the public market side, EA obviously following the Activision deal, as a lot of people wrote about what's going to happen with them, and they were very late to the M&A space, and happy they went forward with a Glue and Playdemic deal following Codemasters, so just to get some additional scales, but that's one of a obviously potential large target. And Chris mentioned Ubisoft. That's an obvious one in Europe out of the public ones.
Okay, Saad, who do you think? Who are you looking at? If you guys could acquire somebody,
I've got to be very careful. I've got to be very, very careful. There's two ways I can play it, which is to name everybody so that nobody would have a clue about who we're looking for, or just stay quiet. I mean, I think, look, the reality is for a company like Miniclip, we are a developer publisher first, right? We are not a kind of, this is going to sound super disparaging, but it's not meant to be. It's not meant to be a pejorative at all. We're not like a kind of holding company that is then acquiring studios and trying to consolidate as one. Like we happened to be a company that had a lot of success ourselves and then saw an opportunity to acquire and add to that, right? So when we think about consolidation and we think about other studios, we think about where is it that we are weaker in terms of a category perspective, or where can we consolidate more strengths of the things that we currently have, a good foothold in. And I think when I look at it, there's some obvious categories that we aren't super strong in. And so I think about companies like, Tactile Entertainment, and what Asbjorn and the guys there are doing is phenomenal. Everyone's nodding. Everyone knows that they're doing a good job there. I haven't spoken to him, so I don't think recently, I should say, so I don't think I'm hurting anybody there. I mentioned this last time, but First Touch, what Charlie and the guys are doing in that arena, I think those are two companies in particular that I think are very good, and would any acquirer would be interested in. In terms of the kind of bigger stuff, I really, really couldn't comment, but I could say that we're talking to everybody. We're having conversations with a lot of people. And I think what I find interesting, actually, and I've said this to our own team for a while, we've been in the mix for a lot of deals in the past, and we've just been very disciplined on where we thought it wasn't. We felt like things were a bit overpriced or just beyond what we wanted to do, and we took a very disciplined approach. We were always kind of there. And now that those the public markets have cooled off a little bit, and the firepower isn't necessarily as it once was for some of them, the door has opened for us because we've kept that kind of discipline there. And there are a lot of opportunities for us to kind of look at companies which, would have been a much more competitive process with some of the other acquirers out there. So I think you will see, I think to Chris's point, you'll see us look at some big deals. We'll be in the mix for those big deals, and we'll hopefully be able to close some of them. But I think they're going to be fewer and further between than what it was in the past. Now, that said, I say fewer and far between. I think that's just because the meaningfulness of some of these deals are going to be more transformative to our own business. And with that comes a lot of content and other studios that might make sense for us to try and figure out what to do with them. But on the flip side of that, actually, it's going to sound hypocritical of what I've just said. The flip side of that, I do see a pathway in the next 6 to 7 months where we make a few big moves and we do it quite quickly. Because I think if we're going to do it, it's going to be consolidated very fast, or we're going to move very quickly. And I think there's like maybe a few deals that we'll do that will suddenly change the way in which we're viewed in the market. I think at this point, a lot of people are looking for relevance, and I think the way to be relevant in the market at this moment in time, to what Chris has said before, and I think what we're seeing in the business at the moment, is launching new games is more difficult than it ever has been. So working with companies who have got established franchise and established IP and collective, kind of the collective kind of umbrella of that and adding the synergies around that makes a lot of sense. So I think we're going to see a lot of that. So can I name more names? I probably can't. I've signed a lot of NDAs, Joe. That's yeah.
Chris, what about you? Can you speak to some of your fingers?
Man, I think it really comes down to, if you're looking at it through the lens of what's possible, then the chessboard can be really big. And if you're looking at it through the lens of what's likely or actionable,
right,
that becomes a really narrowing filter, because obviously there's a lot of factors that go into determining actionability, whether a company is at a stage where it wants to entertain these discussions given where it is in the life cycle, whether it's already a controlled company, whether it's public versus private, where it's based geographically, how much appeal that company has. Let's take a great example. I think we all can say that one of the most admired companies of our recent phase of mobile is Playrix. And having said that, you would think that Playrix on paper would be a very actionable company, either from an acquisition perspective on either side of the equation or to go public. But then you look at the details of how the company is constructed, and many Western companies are just afraid to take that on. Right. You have a concentration of wealth and equity sitting in two people's hands, and a distributed network of studios that are in a part of the world that has historically been challenging to operate if you're not from there. And so that context here is everything, right? And I mentioned some of the companies before about Valve and Epic and Steam and Unity and IronSource and AppLovin, and there's so much actionability that is in theory possible. But when these conversations that Saad refers to actually happen in the background, either directly or through liaisons like Michael, things get filtered out, quite quickly. So, the chessboard to me is as big as our imagination, but also as narrow as our practical limitations are. And so, I think if I had to make one prediction, I know you didn't ask, but maybe I'll force this panel to make a prediction in terms of a company that would be part of a next deal. I think the one that makes the most sense, obviously, is Playtika. They've signaled strategic review. I'm sure they're ginning up a process, and they will probably go like Zynga did very quickly, and because there's already a blueprint in place for multiples and precedent transaction and things of that nature for a very similar company. That seems to be the one that will happen, and then from there, depending on the regulatory landscape, somebody like Ubisoft or Square Enix or some of those, below the top three, may be interesting to Sony and Microsoft. I think the Bungie deal, to me, was not a reaction at all to the Activision deal. I think that thing was going for a while, as we know how long Japanese processes take. But it was interesting to me that it ended up in Sony's hands, given the historical relationship that Microsoft had. So I think Sony has to step up and make some bigger moves if it wants to compete on subscriptions and proprietary content. And then the wild card for me is always Nintendo. Do they finally buy Niantic? Do they finally do something out of their comfort zone? Or do they just stick to their knitting? They're always a conundrum to me every year in what you think they're going to do, and then they do something completely opposite. So,
well, Chris, to challenge the panel, I mean, I just challenge you on this is like, well, the bigger question is, who do Playtika go to? Who are the acquirers of Playtika? That's the bigger question for me.
Yeah, I would say I'll defer to Michael on this one to be more pragmatic about it. I'll just throw something somewhat nonsensical out there. Was if you can merge Playtika with SciPlay, and you merge businesses that are not averse to that category. I know that the market may not give them credit, but if they were able to further diversify their portfolios, especially SciPlay, I've been a little bit surprised and I would say even disappointed at their lack of ability to execute diversification, because I think that would have served them well, like it did Playtika. But depending on how Playtika, they define their casual or non-casino business quite liberally, because it includes things like bingo and other things that are kind of straddle both ways. But I think they say that they're a pretty balanced company, like 50-50, 60-40, something like that. But somebody like SciPlay that needs more scale, that knows that market very well and could easily leverage a more scaled public company presence to more easily diversify and buy those independent opportunities kind of below the line that we've been talking about. That seems like an interesting, public to public deal that won't get a lot of scrutiny because there's not a lot of competition that is going to, reject this deal because social casino is a really tough business to be in, but if you're doing it well at scale, it can be very profitable. So that one to me seems like an interesting one that may not make sense culturally, but may make sense on paper.
Thanks.
Yeah.
Good answer, Chris. Yes.
On the Playtika side, it's not that trivial because the market cap is like 8 billion-ish or something, so they're not small, and not a lot of players would be able to do it. So and the Chinese one traditionally shy away from social casinos, so they're kind of out of the picture. Who could easily do something, and it could be a potential merger with some others, or it could be.
AppLovin's another one, by the way. I totally forgot to throw them in there, right?
Especially if you want to.
It could be also a private equity deal where a large private equity firm essentially takes them private, because Playtika has been, highly profitable, very successful in this segment. They have been private for many years after the Caesar Interactive kind of sale to Giant, which never closed. So I think looking at the universe like Carlyle, KKR, or maybe some of those PE firms team up to make that deal happen, I can see that as well.
Yeah, enough of those PE firms actually have investments or portfolio companies in gaming already that they would just marshal that asset, right, to be the Trojan horse to help them with that.
Yep.
Yeah, and it seems like Playtika, just based upon the impact of IDFA deprecation to its business, I agree with you, Chris, like a company like AppLovin that may have enough data to be able to help offset some of that stuff might be an interesting way to potentially address some of that stuff.
Yeah, look, IronSource as well. IronSource and Playtika share a lot of real estate, right, in terms of geography. So, from a culture fit perspective, there's a lot of overlap there already, much more so than with AppLovin.
Right. Cool. And maybe like the one other topic it'd be great to hear your thoughts about is we've seen kind of like acquisitions, whether you think there's going to be more or less, we have seen recently a few carve-outs. So Scopely's acquisition of GSN Games from Sony Pictures, Tencent recently acquired Inflexion from Improbable. And can you guys speak to this kind of opportunity? Do you think we see more of this? And Chris, you also mentioned King, and Saad, you guys mentioned King. Is that a possibility of getting carved out? Like, what do you guys think of this general type of play, and what are some of the potential opportunities if you think there are any in this area?
Yeah, I mean, I think it's like I said before, everything's in play. All conversations I think will be had. But Chris made a really good point about actionability, right? So it's more around, what is the overall vision and motivation of these companies doing what they're doing, right? Like, with King, I think it, and I don't know. There's no, I don't want to put any speculation around any of this, right? But with King, it just doesn't seem to fit with the overall narrative of the Microsoft Activision deal, right? So then you kind of think, if somebody came and approached with the right price, and if you could make the case of the management team of King and they were supportive of it, then I think Microsoft, if that deal closes, would listen, or Activision, whoever the stakeholders are around that room, would listen to that kind of the potential of a deal around that. But I think what we really need to understand is what is the vision, what is the strategy, and what is it that these companies are going after, and what are these management teams trying to achieve. I think, with Microsoft, we talked about that earlier. We kind of have an idea around what that is. With the brothers at Playrix, we kind of have an idea of what they're kind of trying to do, but they're not really trying to globally dominate. They kind of having fun is a disparaging view. They're doing a great job of what they're doing, but we know what they're kind of trying to do, and so it really comes down to where there's a carve-out opportunity and where there is an asset that makes sense for someone else versus it's sitting with the current kind of owner. That's where it comes down to. And I think we've talked about AppLovin, we've talked about Playtika. I think it's very interesting. I haven't really done this work, but Michael, it would be interesting to see what Playtika would be as a social casino business versus their casual games business, and what would happen if you actually separated that, and would there be would that be more valuable as a separate business versus what it is today. As Chris says, there are sensitivities around the social casino part of that business versus, some of the other great assets. I mean, what they've done with Wooga, for instance, and the Super Tree guys, phenomenal job. Is that something that could be more valuable outside of, the current wrapper of Playtika versus, a deal on their own? And I think if I was looking at that, there is a possibility of that. And I think there's other assets as well that some of the other public companies have. I mean, you could see it happening if there was a certain acquirer of EA. Would Glue and the Playdemic deal make sense to that acquirer? Somebody that, another company we don't talk about, Chris mentioned some of the Japanese players, but Nexon are out there too. There's plenty of assets that they have, which could be interesting as well for that. Similarly, Netmarble, right? And, Jam City, what do they want to do with that kind of thing? So, yes, is the answer. There are those potentials, but it really does come down to the actionability and what is it that these teams and these companies really want, and what are they trying to achieve, and do those assets make sense in the hands of somebody else? And, when you actually look at that, it's probably very few opportunities there in terms of being able to carve those out easily.
Michael, can you speak to that? Are there any specific deals that you're seeing, and what would be some of the, from a mechanical perspective or from an execution perspective, are there additional difficulties with carve-outs relative to typical type of M&A transaction?
Yeah, I mean, generally I see two trends. One trend in general is more diversification, which says don't spin out different entities, being more diverse, which you see with Take-Two and Zynga and a lot of other deals. On the other hand, be more focused too. And one deal was pretty interesting is the ESL sale, the PIF by MTG, and they pretty much had the esports business and the gaming business. And the gaming business has been doing great, highly profitable. The esports business never reached profitability and also had some challenges during COVID. And that's one example where I would say it worked out really well. And not sure if you follow it. I mean, the acquisition price was very attractive together with FaceApp, I think at 1.5 billion. And the MTG shareholders thought it was a phenomenal deal. Not sure if you saw the day the deal was announced, the MTG stock jumped 50% because the shareholder thought, okay, it's great. We don't have this, we don't need to fund the esports business anymore. And getting such a large amount of money for it was phenomenal. So that's probably one of the ones that just happened very recently. And Saad's idea of kind of looking at Playtika as two different pieces, the casual games business and social casino business, I think is a great idea because it also expands the universe a lot. Some of the Chinese one would probably be very interested in a casual games business. There might be an opportunity to merge with some of the other social casino business, as Chris alluded to. So I think that could be a great strategy.
Okay. Chris,
yeah, I think on the carve-out topic, again, context being everything. Carve-outs usually happen when a company is not doing well or it's changed strategic direction, right? You're never gonna see carve-outs happening at a time when things are going well across the board. And so having to know that context helps try and pinpoint perhaps potential areas of opportunity where that would happen. I think the one that comes to mind, because they've already had a history of doing one transaction, is AT&T with their gaming assets, right? So Playdemic was the smaller of the two, but they have the Warner Brothers Games division that has long been speculated about what's going to happen there, as AT&T is a very monstrous company. Warner Brothers Games looks to AT&T like King looks to Microsoft, right? In broad strokes. But the premium that they could get could help pay down at least some incremental part of their debt. I don't know, Michael, if it really makes a dent in their overall debt load, but at least optically it shows their shareholders that they're shedding non-core assets. The only other thing I can come up with is if our friends here in Europe that have historically been buyers are now going to be sellers as they're being pressured to focus, as Saad and Michael alluded to, right? So our Stillfront and Embracer looking at offloading assets that they acquired because they're realizing that they're not getting the benefit of their strategy or their tactics associated with M&A. Beyond that, I think we all know that the GSN Games was in play in various derivations for quite a long time and went through multiple bankers. So that's been a multi-year process. I think Scopely just probably saw a great opportunity to bring more profitability to its books than it had historically, especially pre the Marvel Strike Force deal. So that could have been a bit of financial engineering as well to help them prop themselves up relative to where they were on a standalone basis. The improbable stuff. I mean, tech carve-outs are much easier to do because tech companies are always kind of evolving themselves and shifting their focus on what they're investing in, and so something that's a tools-based solution could easily be acquired. Although by the same token, I know that Rovio has tried for many years and failed to sell their kind of game streaming business, which you would think had some kind of resonance with somebody at a tech or tools level. But alas, nothing has happened there. So to me, I don't really, as I look at the landscape, I don't look at a lot of companies that are in a strategic bind or are shifting focus away from this category other than the few that I mentioned. So it's just more of a moment in time thing as to what, whether carve-outs happen or not. Doesn't seem to be like a systemic strategy. It seems to be more of like an opportunistic tactic.
Got it. And maybe just to wrap up this conversation, thanks so much for your time, guys. Maybe we could kind of continue down the thread that Chris started us off with, which is predictions. If you can make one prediction in terms of, to the extent that you can with given NDAs and confidentiality, but if you could speak to one prediction, maybe starting with you, Saad, to end this conversation, what do you think will happen? And maybe I can start. I'll do a non-gaming content.
That's amazing.
So my prediction is that Unity will acquire Photon because they need a good netcode solution. But go ahead, Saad.
Well, that's a good one. Yeah, they probably should do that. It'd be very helpful if they did, actually.
Yeah.
Okay. I don't kill me for this, but I can't be too specific. So what I would say is I certainly believe that there will definitely be some public companies going private in the next 12 months. That's going to happen here in Europe. I think. Okay, I'm going to put a number to it, so it's not just one. Obviously, one's going to happen, right? So I think at least three of them will go private in the next 12 months. So put a hard number on that. And as Chris says, there's a handful. So that's not many. You can kind of figure that out.
Michael?
Yeah, I mean, we talked a lot about M&A and some of the challenges the public market companies have. But one thing we haven't talked about, and that's what the prediction is going to be, is kind of funding into private companies. And what we see is a tremendous amount of money flowing into dedicated gaming funds. I think Galaxy announced the big one. I think there's more to come. Bitgraph, there's several large funds. Andreessen has a big gaming fund about to do another one. Hero just announced one, and about another 5 to 10 funds I heard of. They're raising money. So there's a lot of money flowing into the space. So one of the prediction is that funding into private companies in 2022 will even exceed 2021. And just like in Q4 last year, we saw 200 rounds, 200 financings into private companies. And that's super exciting to me because all this money is kind of funding the creation of the next unicorns, the next highly successful companies who might figure out the IDFA challenge, who might come up with amazing cross-platform games that eventually will lead into M&A in 2 or 3 years later. So that's kind of my prediction.
Don't you have to have Web3 on the deck to unlock that funding?
I was just going to say, I'm so proud of this group for going over an hour.
Yeah, it took an hour, right? It took an hour, yeah.
I'm so proud of this group for going over an hour and not going down that rabbit hole. So that's probably the only games podcast that has done this recently.
And Chris, do you have any other final prediction to close us out?
I mean, yeah. So we talked about the Playtika one. That seems like a no-brainer to predict. So moving on beyond that, if I look at just putting one lens on, which is scaled private companies, and I'll exclude my own, the interesting ones that are out there. There's Moon Active, there's Scopely, there's Wildlife, and there's Dream Games. Yeah. So the reason why I exclude mine, other than for obvious confidential reasons, we're much earlier in our life cycle, haven't yet taken outside funding, where a lot of these other companies are more mature and have taken a tremendous amount of funding. And that usually, when you get that many people involved in your cap table, the more voices you have, at the table asking for outcomes to happen. Obviously, you hope that you have long-viewed investors in there, but you never know. And again, these are scaled players that can bring a lot to the table in this age of consolidation, but are probably small enough that will more easily withstand the kind of scrutiny that Microsoft's going to go after, because it's nowhere near that size, but really brings a lot of heft and scale. So those are outside of Playtika, those are my four dark horses. I think maybe the other really crazy one would be if Google acquired ironSource to kind of shore up more of its ad business, in response in part to what Microsoft did over the holidays in buying a DSP that wasn't really talked about quite a lot, to be honest. But I think those kinds of companies, maybe Apple gets into that mix as well, on the mobile ad network side. Those are kind of the extent of my crystal ball prognostications.
All right, great. Well, gentlemen, thank you so much for your time. I definitely learned a lot. And for our audience, we will catch you next time. Thanks, everybody.